Again, I think we are staying stable in North America from Q2 2025. Yeah, and the volume is going down, right? So even North America is declining in terms of deal volume, and it looks like this is across all stages, right? Of what we were doing in 2023, and 2023 was not the best of years, right? Look at this, right? In terms of volume, 2023 was one of the lowest. I love IPOs, right? You allow the public to control, you put more scrutiny on the company, you standardize their financials, you standardize their instruments, right? They become proper equity, you have more reasonable, useful and predictable valuations, get more stakeholders, not just, you know, the managers and the few big investors that have board seats. Right, test. We are live with our first stream. I'm mostly recording this for myself as well, but I think it's also a nice experiment to go live. Plus, I have a bunch of research to do, so why not talk through it? It's quite exciting to try to do this live and see how that goes. We have today some research to be done on startup fundraising. We have a bunch of links to go through, and the main goal of today is to figure out what we can gauge about the future of startup fundraising in 2026, and then obviously feed the content machine with articles and interpretations and thoughts and so on and so forth, right? So the goal is to really try to understand the end of year 2025 funding landscape and then forecast for 2026, right? We have queued a few articles here that we can take a look at, and it looks like the streaming is working. Some newsletters, some various things, including looking at IPOs, VC concentration thoughts, and so on. It's a complicated time. It's an interesting time to look at these things, and the startup environment keeps on changing very, very rapidly. So why don't we start from some Crunchbase data? We keep on increasing valuations, right? We have startup deals and valuations at an all-time record, even though that seems to be still on US and in later stages. So yeah, so this is the full activity, even though this is highly misleading because we're counting like billions and billions for AI startups that don't really apply much, and they're not very useful. I think they should be taken out, right? Once somebody raises more than 10 billion or 5 billion, it's not useful anymore, right? And if we include like some 40 billion of OpenAI in Q1, right? So then you get to these crazy numbers. Was it 40 billion of OpenAI? Take a look. Things are slow today. DuckDuckGo is slow. Yeah, August 8.3 billion. Let's see their profile. See what were their last rounds. Let me log in Crunchbase just so we have actual details for this. And Crunchbase is also always a great resource, right? For anything really. For startup funding rounds, look at other startups. If you are a founder, look at other startups that look similar to you, right? And see how much they raised, and like if you can find what kind of milestones they have achieved so far. So it looks like, yeah, a little bit of a latest fundraise to make space for Disney. Here we go. Yeah, 40 billion in March, right? So then, if we look at, this is still, and this is LATAM now. If we still look at global venture funding, right, and we put like 65 billion in Q1, like how much of that was OpenAI, right? So there is still a question, and that's why like what I like to look at is actually the angel seed, and then maybe the early stage. Like that's a bit more useful compared to this like late stage, whatever technology growth is. Again, stages are always changing. Right? So that's a bit of the things of early stage startups. The stages are always changing. They were a bit more stable through the SaaS wave, but now they are a lot more strange. I'm just checking whether the chat and everything works. It looks like it. It is pretty awesome to be chatting. So nice. Too bad that you cannot stream your camera at the same time as the screen. Yeah, that is the way it is for now. But it looks like it's streaming correctly. It's the right page. Yeah, so we see here like a little bit of an increase. We're looking here at global, right? So a little bit of an increase in Q4 for early stage and a little bit of an increase in Q4 for angel seed, which is kind of nice. The things have been going down for a while, and so like seeing a little bit of an increase. We are completely wrong. No, we are looking at yeah last year. Okay, so looking at this increase is pretty interesting to see, and of course it's AI driven, and we'll be looking into that. But that's not necessarily a bad thing, right? Like social network also drove a lot of deals when that was the wave, and there's always a wave, right? Oh, 579 late stage. Again, late stage we don't care much. Early stage. Okay, so here is actually a decrease in number of deals, even though like very, very stable across the last year and something. And seed, okay, so seed continues to decline, right? I think I was compiling some data this morning that goes a little bit further back. It goes to Q3 2023, right? Whereas these things go from Q4 2024. So like 1 year more of data. And we are globally about 30% lower compared to Q3 2023, right? So we still have a depressed early stage environment. Doesn't matter like this whole AI thing plus like the increase of amounts, right? We need to connect that with inflation and see how much that is justified, or how much of that increase of amounts at early stage is just to cover inflation, right? Because inflation has been doubling or so prices for in the past like 2-3 years, right? Concentration and liquidity, yeah, we will talk about this. But yeah, so indeed, like very, very large rounds. Yeah, okay, and this is also something that we should see, right? So M&A in 2025, second highest year on record. US M&A, yeah, higher than 2021, right? Okay, with Wiz was like also 14, 20 billion acquisition. Yeah, and IPOs, we're also going to take a look, right? So let's take a look at that. But not before we look at the specifics of countries, right? So we see Latin America here still continuing sort of a depression, or like a harder environment to fundraise compared to the peaks of 2021, where a lot of investors were really, really going into Latin America to invest. We see the same contraction of seed, maybe an expansion, at least in size of the deals in early stage. Do we have the not by volume, early stage by number of deals? 32. No, not early stage, seed and angel. Yeah. So we still see this. Crunchbase is always a bit weird because next month they're going to update these results and they're going to look less negative. So they don't do any estimation of like how wrong they are, how many deals they still don't have in the database. Because now it's only the 20th of January, right? So it's only been 20 days for companies to disclose deals for last year, which a lot of them don't disclose, right? And so I'm tracking my own data on this, and the last month is always off by, I don't know, 20-30%, right? So we can assume Q4 is going to be around 100. And indeed we are lower. If we look at like much further back in 2023, Latin America was around 160, 175. Q4 2023, 175. So in the end, and you can go back and like find these articles for the previous years. Yeah, the fact remains that we were 155. We're gonna probably end up around 100. That's like a 30% reduction in seed and angel investment, right? Um, that's okay, right? Again, it's just a tough environment, but it's important to know, right? So I think we want to see also. I think we want to see how's it going in the US. So that's North America fundraising 2026. They have some articles. Just to Google this time. I was checking this morning, and indeed, 8th of January. So they have an article for each region, let's say. And again, if we go and look at seed as an indication of the health of the early stage environment, because the larger rounds are much less, well, they are easier to fix, right? So there is capital. It's more like where is the allocation, but the early stage is what is suffering at the moment, the very early stage. So still here, we still have a contraction in the US. So I'm not really sure where the global stuff comes from, where each of the regional things are declining. So that's maybe a question. The only thing that I couldn't find this morning, maybe it's live now, is Europe, right? So, but is Europe supporting the total growth? I don't think so. Maybe that's why they're late in publishing that one. Or maybe it just wasn't crawled by Google even. So yeah, so this also is going to end up around here, right? We don't know yet. It's a bit too early to judge this data. So they kind of always do this, but this seems to be like fairly in line. And again, we are, so if we look to 2023, North America, we were looking at 2.3K, 2K, 2K, right? So a different number of deals compared to, yeah, okay, compared to at least the second. So Q2 really, okay, so we continue to see this trend, right, of depressed number of deals at early stage, roughly from the moment the tariffs were instituted, right? From the moment where like this idea of globalization is coming under pressure, and investors are a bit more reticent in investing in early stage companies. Okay. And we still have like a slight increase in volumes, to be honest. I don't think this, in terms of capital invested, I don't think this is justifying inflation even, right? So, of course, we have several phenomena happening at the same time, right? So we have on one side the fact that AI is lowering startup costs, but also the fact that AI is lowering startup costs so much that you actually need more capital on distribution to be properly competing. And also we're driving investment to sectors that are not software, which are requiring higher investments upfront. So this is not a great look in the US, I would say, for this early stage contraction. How's it going on early stage investment? Okay, so early stage is growing. Number of deals is going to end up even higher. So then maybe that's what they were referring to in terms of the title. Okay. Yeah, and growth stage even more, right? So they are arguing that 2025 is then back the best year apart from the sort of the craze of 2021. Okay, probably because of the late stage, 180 billion. So what was that first article? Why did it say global? Was this like 54 billion? Oh, just to AI. Okay, but this one was 61 billion, but then In the North America one, this is 180 billion in 2025, right? As Q4. Okay, so maybe then quarterly. North America, 181 billion. So, okay, so late stage, this includes all the AI stuff, right? Like the very big AI investments and so on, which is good to see. Like, it's great to see that there is a lot of capital available when there is an opportunity. Calling this like early stage capital and focusing on it when it's a lot of private equity, it's a lot of special deals with special companies. Not super interesting, I don't think, for what we traditionally call startup environment. But maybe that definition needs to be updated. Age stays roughly the same with a little bit of growth. Plus, again, we're going to have to add a little bit to this. If we look at the years, yeah, okay, so we're still at sort of 2020 levels, right? So, yeah, not too bad. And then early stage, 20 billion. Okay, we've been growing a little bit. Again, this doesn't cover inflation, right, in either of these stages. So, yeah. Q4. Yeah, and then here again, right, we see like the installment of tariffs here, and then sort of a contraction of that trend. A growth probably, yeah, with inflation, right? And like I know we're talking about inflation of like 4 or 5% per year. However, that one is I forgot how they call it, right? But like core inflation. And like if you look at overall inflation of assets of anything is higher, right? Um, yeah, you're gonna have to cover that, right? People need to buy houses, people need to pay rent and pay electricity, and so like if you remove all those things from core inflation measurements, I believe the actual inflation is higher than what is reported. But yeah, okay. So again, I think we are staying stable in North America from Q2 2025 with a bit of increase for inflation. Venture deal volume, yeah, and the volume is going down, right? So this is a very interesting chart as well, right? So even North America is declining in terms of deal volume, and it looks like this is across all stages, right? Again, we're gonna have a bit of a rebound once all the data is in, and this one goes back to 2023, as I was telling you. So this one, yeah, you see 3,000, 2.7 thousand, 2.5, and so on. 1.3, right? So we are, well, let's say that this is going to end up at 1.5. We are about half, right? Half what we were doing in 2023. And 2023 was not the best of years, right? Look at this, right? In terms of volume, 2023 was one of the lowest, right? So what was the number of deals in 2021? Well, it's definitely in the data of Crunchbase, but we didn't go that far back. Of course, it all goes to AI, but that's okay. We know about that. And yeah, OpenAI 40 billion, Anthropic 13, right? So that's already 55 billion out of what was it, 180 for the full year. Useful, right? Not so useful to look at this again. Early stage growth, nice. This is going to end up even further, right? And then seed in decline. Again, we're still looking at a year where like everything is down 50% from in terms of number of deals, right? Down quite a lot. We're still looking at like one of the worst years. In reality, the number of deals is probably much lower compared to 2021. Was 2021 exaggerated in terms of number of deals? 2022 and 2023 also? Yes. All these SaaS, micro SaaS, and so on that should have been a loan or it should have been self-funded or bootstrapped was receiving like small checks, and so they were coming in here, right? And so they were skewing things. But still, we're definitely not in a booming expansion market for early stage funding. and actually the number of deals is still going down. Cool. Let's see. Let's duplicate this and let's go to see Southeast Asia, right? So let's Google. So Crunchbase funding Asia 2020. So, right. Asia a bit more volatile, right? So everybody knows. Again, this is tough to justify the global article with the growth here, but let's see. So Asia, yeah, massive contraction from 2021, still hasn't recovered from 2016 levels, right? So venture dollars, quarterly. Okay, so decent quarter, maybe an increase here, right? Because again, this is going to increase even more. Okay, this is going to be a record for the last, 3 years, something like that. Okay. So Asia may be pushing further in the future. I would really appreciate these charts to be coming. Thank you. Okay. So still on the depressed side for seed, and then having early stage pushing further. This again is gonna increase, so this is likely gonna be a decent quarter for early stage. Interesting. Okay. What do they say here? New HC startup focus on intelligent driving, AI, Israeli startup, artificial general intelligence. Okay, 200 million. Okay, AI investment. Nice. Country by country. Yeah, so this is interesting to see because Asia is just such a big place, right? So we have China increasing, India looks like fairly stable, Israel finally doing a bit better, and Singapore ups and downs. Okay. Very cool. Very cool. And then, of course, if we try to look at Europe funding 2026, I don't think we find anything here, unfortunately. Predictions. Maybe they focused it on fintech. Is this the article? Global. No, this is fintech. Yeah. So this is an industry. Yeah. So this is still October, right? So we can definitely look at that. Let me see if we find anything. Let's see if there is anything here, or maybe they talked about it in an IPO article. No. So it looks like they haven't published the European numbers yet, which sucks. But okay. Let's take a look at the Q3 numbers. Seeing that we held steady, then again, that's gonna be the improvement, like once the data actually has some time to come in. Very depressed volume for pre-seed, a bit of an expansion in early stage. Okay. Yeah. So we see this. Okay, Europe is not going to end up at 747. It's likely going to be here. But indeed, we are seeing this in pre-seed, and volumes are continuing to held more or less, even though like once you account for inflation, this is clearly decreasing. This is going to end up probably here, right? Yeah. We're seeing what everybody knows about Europe, right? Toughness to innovate, missing the AI wave. We do have some medical stuff, but indeed, the data is clear on Europe. Right. Let's see if we have some more data here. So this is French tech VC trends. This is what I wanted to see. We don't have an actual, nothing more than this on this newsletter. This is the newsletter of Volta, research. So it's pretty nice. I thought this link was clickable. Let's see if they have anything on their blog. Oh, and we should add also, if there's anything new by Bridgewater Research. Yeah. Let's see that later. For now, let's see this. Actually, the actual Avolta. No. I would like to just see, is it .io? Do they have a blog, please? Inside. October. Yeah, so that's a bit old stuff. Yeah, not too interesting. So this one goes this one. Right. So I wanted to see I have a specific tag on my inbox about things, startup market news. Right. So that's the Avolta, Crunchbase. I think we already saw Crunchbase. Yeah, we're going to talk about A16Z. Interesting, right? We see funding per capita from PitchBook Europe, $104 versus 47 for Finland, leading Europe. Interesting. Singapore, Israel, Switzerland, UK. Okay. That it's a useful statistic, right? And where we end up is that the Netherlands, or like let's take Finland, about half of the US include a bit of, I think there is some weird exchange rate stuff, but let's say about half the US. Switzerland, same, despite the fact that Switzerland is more expensive than the US, right? So Switzerland is probably like, 1/3, right, of US per capita. Netherlands, where I'm based, about a fifth, almost exactly, right, of US per capita. Makes sense. The sad truth. All right. We bite. What is the PitchBook? If it's a downloadable report where I have to put my email, probably is, isn't it? Why is it so slow today? I guess streaming slows down stuff. It's not. There was something to buy. UK is still active and scale. Yeah. So France's environment is very much state supported, right? And so they did great, to be honest. And now it's like kickstarted in a strong way, but still receives a lot of support. Okay. So France is again set to be surpassed by Germany as Europe's second largest VC hub by deal value. Interesting. In Germany, but still there's a lot to do in Germany in terms of simplifying bureaucracy and things like that. Despite that, we see strong innovation. So that's great. That's great to see. Funds of funds, okay. Yeah, of course, Helsing. Yeah. Nordics. Wasn't it bought 800? By whom? Let's see. No, let's they made this whole like crazy search with AI here, but like literally the only thing that you need is a filter on company emails. Also, why is it a dog? That's beyond my comprehension. Series E, led by Fidelity. Okay, interesting. Right. Now where are we? So we were trying to understand this one. Yeah. European VC funding. Yeah. There isn't any data about Q4. We have to publish the Equidem data still, so that's coming. It's just delayed. And I wanted to have it for this video, but then if I wait for that, then I would have never had time to actually do the video. I just said better today than perfect. Deal room, speaking of Europe, right? What do we have? Enterprise value of companies. Okay. I bite. What's Stripe? Where are we counting? We're not doing Europe only. We are doing tech companies funded from 1990 onwards. Okay, tech companies. It's a bit strange to call companies tech companies, right? Because like, what is like a car company is not a tech company. Like they do technology, right? Even a hammer is a technology. So it's like this, like more like internet companies, right? But then what is SpaceX doing there? Super useful. Global VC investment, non-AI AI. So they have 200 billion. So like a total of what it looks like about 400, 450, which like how different is it from Crunchbase total, right? Which was global. So to AI, okay, so that seems like fairly similar. The 200 billion in 2025, and then they don't have the global yearly, do they? Why? 425 billion, right? So Dear is also talking in dollars. Looks like it, yeah. Entry multiples. Who cares, man? How can you even rely on the revenue of, first of all, how do they know them? Second of all, how can you rely on the revenue disclosed by startups at this stage? Plus, like, the multiple is going to change so much based on the forecasted growth. So, who cares? Like, this is really like unreliable and misleading. So 18.2 in North America. So what are we supposed to take from this, right? That 18.2 is like startups in North America are valued twice as much as startups in Europe and rest of the world with the same revenue? Maybe. So first of all, if we divide that by currency, right? So currencies have different purchasing powers, right? So second of all, the growth, right? There are some intrinsic aspects of American companies that allow them to grow faster, and they allow return to investors to grow faster, right? So there's a healthier M&A market, there's a healthier IPO market, there's a healthier capital market in general. So for like follow-on fundraisings and so on. So is it good, bad, sideways? Public companies are happier to work with smaller companies. There is more risk appetite, right? So it's easier to find customers to grow faster and so on. So is it good or bad that you have like twice as much of a multiple? Nobody knows. Is it even real? So yeah, I wouldn't worry about that. I would worry about people thinking about multiples in early stage. Like that's not really what we're trying to do. Scale up. That's another thing that we shall not engage with. By destination, yeah, we know that enterprise value by funded cohort. Okay. So we are growing enterprise value faster and faster, right? So that's kind of like what we need to get to grips with, right? You need to have like exponential growth now more than ever to fundraise, right? Blah blah blah. So stories, right? Okay. Let's go on. This is A16. Okay with that. Okay, so actually deal room PitchBook sets it at 512 billion worldwide. Okay. This is going to be a report, right? You know it. You know this is going to be a report. Let's see if anybody has written in the chat. Not yet. Yeah. It's a report. It's a report. Oh, we can download it, right? I think so. I'll download it on my other browser. Might be a bit faster, to be honest, because then I have autocomplete. And we want, yeah, let's do the Excel. Why not? Actually, that's the only thing that they share. They don't share any PDF or anything anymore. So let's take a look at global first, right? And let's bring it in here in Escalator. Okay. So let me just find it. Global deal activity by year continues to be interesting. So yeah, an improvement. We have, yeah, so you see Dirham does do PitchBook does do an estimated deal count because they don't have all the deals in yet, right? So then it becomes a lot more interesting to see the data straight away. And we are growing, so that's pretty nice globally. And they have it by month. I would much be more interested by early stage. This is always an interesting chart, right? VC fundraising activity. So that's kind of like how much powder there is. Apologies for the screenshot. Yeah, clean screenshot. Right. So yeah, so this is more interesting, like how much capital are VCs actually raising, right? And so how much capital is available in the coming 10 years or so, right? So this is a lot less than in the past. Deals by vertical, shares of deals by AI deal activity, deals by region. They don't have it by stage? No. It looks like they don't have it by stage. That's okay. And then the thing that they do have is in Europe, right? So, and they are claiming some rebound in Europe too. So this is by year. So rebound 10,206. Well, not rebound, but like a sort of conservation of momentum from last year. And then if we look at by quarter, they do show. First, they show these estimates, which is super nice to see. They show Q1 always being higher in terms of number of deals, but then the same in terms of capital. So, do all the small companies raise in Q1? That's a good question. Why? Why would the small companies raise in Q1? Because they're simpler to pitch. People want to do quick, small things. Okay, but this continues the trend, right? So even if we are on yellow, we are on 2020, 2019 levels, which were not horrible for Europe. And like with more volume. But again, like I think we can explain this by inflation, right? 15 to, what are we here? Give me a line. So we are, the line is there. Okay, so we are like slightly lower than 15 and then slightly higher than 15, right? So so I was trying to capture the values, like let's say here, right? So that's like 12. And then here, like if we average 2025, 15. Yeah, but we have like 5 years that have passed. 5 years at 14% inflation would be doubling. So about 5-6% inflation, and you would get this increase. So if we are getting like 1.5 is the increase, right? Is it like 1 plus x at fifth, right? So if we think about x being like 10%, right? So at the power of 5, that would be 61%, right? So 8%, yeah, 8% gives me 1.469, right? So 1.47. So then x equal 8%. Have we had an inflation of 8% per year since before COVID? I would argue. Cool. So Europe doing slightly better, or at least holding on to its without experiencing like some further decline, right? That's interesting, right? And like if we look at this going forward, right? Yeah, it could be that we reached like some sort of a moment in history as well where Europe can be waking up, and an investment that was going to other parts of the world is gonna be invested at home, right? So that could be very interesting. Um, where are we here? Okay, agri-food and so on. PitchBook talks about the Venezuelan oil in the context of startups. We're not gonna cover that today, but it could be interesting. Tech.eu, right? From our friend, we had a podcast with Robin Wouters a few months ago. He's not in tech.eu anymore, but he was the founder. Right. They're doing their own data, of course. Big picture annual report for 2025. Can we download it without doing emails? No. Okay, then we've done enough. All right. So they seem to be saying like a little bit of a conservation of momentum again. Okay, good. Not too much interesting stuff here. PitchBook again. Yeah, same. Like they tried to knit this geopolitical stuff inside startup news. It could be interesting. Good to see like big rounds in France. And we're continuing this trend, right, of connection between governments and startup funding and innovation. So yeah, I think Bridgewater calls it this mercantilist economist, right, as a shift from capitalism more into mercantilism. Yeah, quite interesting. We are here, and you can see that more and more into in Europe as well these days, right? So right, okay. The UK tech is growing again, even though it seems like they never stopped, right? So not really sure, but okay. I mean, in Europe, UK seems to be fairly healthy, right? We had some data before as well. There was talking about dollars funded per capita, right? Which had UK on top in Europe, or at least very high, and like number of startups and so on. Fintech continues to be interesting, of course. Health, great to see. Energy, hosting. I think this is because of all the data centers, right? They did some big rounds there. Core AI startup, 7.9 billion. Okay, cool. We don't know what's the percentage. Okay, thank you. 33%. Nice. And then, of course, yeah, the alumni, right? And this is, again, huge, right? This is what we really need to try to push, right? Successful startups create hundreds of successful. Each successful startup creates hundreds of successful companies after them. And we need to do this with stock options, right? There is no way that the people that started these other companies coming from these very successful startups, if they didn't have any stock options and any like return from an IPO or from like a late secondary round, there's no way they would have had the money and the risk taking capabilities to start their own company straight away, right? So we need to, and we are trying to do everything we can on the Equidom side to improve the situation of stock options in Europe. Right. Moving on. All right. So that's that, right? Okay. So we analyzed a lot the situation in 2025. We see still the same. We didn't go too deep into industries and specific sectors, but what is clear is that AI keeps on being the main driver of things, right? So we had just in the new year, they didn't manage to close it before Christmas, apparently. A little funding round of 20 billion for Musk's AI, and doing good stuff there. And then, of course, the massive, which I had here, didn't I? Yes, the massive announcement from A16Z, right, where they announced that they raised 15 billion, right? I mean, when you are doing these large deals, like you need to have the capital for it, right? Plus, capital is a competitive advantage, right? You are the biggest fish, you get the best deals, you can do the best returns, you get the best marketing. They have all these theses now that they also add value to companies, right? With they have, I think, 400 people dedicated to adding value to their portfolio companies. Awesome, right? Good for them. But yeah, one company is raising 20% of all venture capital dollars allocated in the US in 2025. So that means actually that we got allocated less than 100 billion, right? No. Yeah, right. Less than 100 billion in the US, which we can compare with the PitchBook data that we were looking at, right? But the global one here. So the global, we have it on, right? So this is global VC fundraising activity. Maybe the 15 billion was not announced, but indeed, right? Worldwide 118 billion into about 1.2 thousand funds, out of which one that has about more than 10% is A16. Again, like, yeah, I know this, like people are complaining or they are talking about this concentration in VCs. I haven't really thought too much about it, to be honest. There is still like a fairly large number of them, but it's still like a fairly small number when you consider pretty much any other industry. Right? Like 2,000, 4,000, 5,000 funds is not that many. Again, it's not a massive industry, right? The whole early stage funding. There are bigger industries, right? If you take tourism, if you take fashion, if you take travel, if you take they're bigger industries compared to early stage funding. But this is the industry that we like. Is it a good thing? Is it a bad thing? Right? So new business models, new things are requiring more capital than ever. Having a venture fund, in that case, could be considered a good thing. If you don't have a massive venture fund, then the only investors entering these deals are the massive Emirates or the massive pension funds and so on. You could argue that a venture fund is quote unquote democratizing that a little bit, at least, like allowing other people to go into those companies, to invest into those companies. We're still talking about the 1% of the 1%, but still we have removed at least one order of magnitude of percentages. Are they having like a massive power over the early stage ecosystem? I don't think so. I think there is more power in the hands of like the various Emirates, discretionary spending power, SoftBank, Tiger Global. So a lot of the South America growth that we were talking about before was in the wake of Tiger Global investing heavily in there. I don't know. I don't think that's something to be worried about. We'll see. Maybe I'm wrong. But yeah, but that happened. Pretty cool. And IPOs, right? So that's another interesting thing to take a look at. So yeah, look at that, right? India listing 20 VC-backed startups, 28 profitable unicorns, right? About time. Fantastic, right? The world's most active IPO market, according to Orius Venture Partners. Do we have the report? Always good to go at the source if you can, especially these days where everybody's just repackaging AI stuff. Why does this have so many ads? Oh my God. Download Chrome. Okay, so 20 VC-backed startups, 9 new unicorns added to the ecosystem, now valued at 419 billion. 1,500 unicorns overall, and a growing base of 28 profitable unicorns. So then it must be 9 new unicorns that are worth 419 billion, right? Because 1,500 unicorns would be valued at like 1.5 trillion if my math is not wrong, right? and 28 profitable unicorns. That's a small percentage, isn't it? Like, what are these guys doing, right? Yeah, awesome. Okay, good for you. Let's see. So I was seeing in the PitchBook report that we had some IPO or at least exits by region, right? So let's go back to Excalibur and we take a look at this exits by region, and this is yearly. Interesting, right? Again, like it looks like aside from COVID, like we are continuing on a fairly stable march with North America growing, Europe stable-ish slash declining, Latin America declining, and rest of the world kind of growing. Asia. Yeah, no, Asia is this blue here. So a little bit declining on the exits. Interesting. Okay. For when you look at it quarterly, it feels like declining. But again, this might be lack of data, right? And we did have that optimism in Q1, right? Globally, especially in the US. Look at this, right? And then it kind of continued a little bit, but then it cooled down. VC exits, right? VC exits value or VC exits value by region, and we want to look at it quarterly, maybe, right? So this one allows us to estimate a little bit the dry powder, right? So again, here North America huge, Asia huge, Europe contracting, Latin America, rest of the world smaller. Interesting, right? So a lot of change of positions, and I think that's one of the trends, right? So there needs to be like a massive change of positions from software to other industries, right? Software per se, because of AI and because of the increased acquisition costs for any SaaS product to acquire customers, it's just going to be so much harder to raise capital for it, right? So yeah, so you have funds that were committed to investing in software that are changing, probably exiting and changing their mission and changing their mandate to invest in other things, right? So again, pretty interesting. Yeah, pretty interesting to see that in the data. Look how far we are, right? How far we are from 2021, right? Where like everybody was exiting, right? Crazy. Super interesting to see. And then Q1 2022, it just stopped completely. Interesting. Well, it didn't stop completely, but it just like we touched 450 billion and we are just now back to 150, right? So that's like 1/3, right? So we lost 2/3, and like immediately after lost even more, right? So like lost 80% from one quarter to the next of global exit activity of venture funds. Interesting. Oh, global exit by type. We have exit by type and on the chart here from PitchBook. Okay, nothing. Well, IPOs are back. IPOs are back, right? Looks like the fastest growing chart here, at least in terms of value. Interesting, right? Love to see it. I love IPOs, right? You allow the public to control, you put more scrutiny on the company, you standardize their financials, you standardize their instruments, right? They become proper equity. You have more reasonable, useful, and predictable valuations. You get more stakeholders, not just the managers and the few big investors that have board seats. Yeah, good stuff. By region, exit activity of AI ML. I mean, this could be something, right? You see here already some exits in the AI ML VC industry. So like companies that AI companies, ML companies that got VC investment and that are already exiting. I mean, that's a trend, right? Maybe they're exiting to other AI companies, but like another sign of a fairly hot market. Okay, good. I've been rambling for forever. So let's talk about 2026. That's the tough part, right? And now if I make it small, everything is going to be small. So let's do new. Um, so we're coming from stability in EU, US, despite the hype, right? Well, okay. So I think we can divide things in US stability with hype, with AI hype mostly, right? We have EU, which is just like stagnant. There's no point in calling it stability. Stagnation with some heartbeat. When we look at defense and a bit of localization of investments, that maybe like money that was maybe going abroad before. We have Asia pushing, pushing, pushing in early and seed stage. So that's good to see. And we have LATAM still a bit in a dynamic dynamic contraction, meaning that anything could happen, in my opinion. Like it doesn't take a whole lot to switch that dynamic there and really push things. We haven't talked too much about Africa, which remains a bit secondary to the whole discussion in terms of volumes, but has interesting opportunities and interesting areas of growth and stuff, right? So there is so much to be done there, but it's almost its own discussion, right? If we look at it going forward, it's tough to say, right? Because like now the whole thing is connected to geopolitics, right? And so where are we going in geopolitics is true. The US keeps on having a massive internal market. So startups that cannot sell abroad, they will still focus on the US market. Maybe that's a little bit of a protection of large home market, right? Something that, for example, China or Southeast Asia have less of, and Europe as well, right? We still see the massive contraction of VC fundraisings, right? And a bit of a concentration, even though that's like secondary. Wouldn't be too worried about that. I think the reason for this is just because of a big switch or like a big shift in model. You can't raise for software as a VC because then you cannot employ that capital and so on. And like raising for AI is a different game. And just there aren't that many AI companies that are defensible, that are VC investable, right? Because most of them do software still. And the ones like you can raise for software VC, even if it's AI software, right? Even if it's AI software. Yeah. So then the funds have to migrate, right? Have to migrate to other areas, right? Which are working, right? So if you look at defense, if you look at energy, just things that require lots of engineering and things that are like just technology readiness level less than before, right? But that require large investments, right? So those are the things I would say. And this is like speculative. So in Europe, I think we are pretty sure, or at least like there is a higher confidence level that things are gonna stay leveled, I would argue. We are having also the unified market, how's it called? Law 28 or right. So the unified law for early stage companies. So there is a movement to unify the single market for early stage companies and cross border early stage investing and so on. So those movements are helping the early stage ecosystem here. Plus there is like additional national sort of identity, and also the fact that you want the capital to stay home more, right? To concentrate locally rather than go to the US. And there is capital, right? There is capital. That's not. Plus, everything else is still through the roof, right? We didn't look at Bridgewater, which maybe we should. But like capital is still, like everything else is still through the roof, right? We still have the highest stock market, highest real estate, highest commodities. Maybe crypto is not at the highest now, but it's close to. So then where does the capital go, right? In innovation. So capital is available in Europe and everywhere else as well. US, that's the big question. AI bubble. Everybody talks about it. A lot of the US economy and positivity is based on capex, right? So this is based on, this is not opex, right? And the difference is that opex is more reliable, is more sustainable. Opex is like the normal cost that every company has every year. Capex is the cost that companies anticipate, so they don't do it every year, they do it all at once, right? So when you buy like a big building, that's capex, right? When you rent it, that's opex, right? So there's so much capex that is buying, for example, Nvidia chips, and all these companies are buying like data centers and so on. That's all capex, but that capex ends up being revenue for somebody. It's somebody that builds data centers or builds GPUs and so on, right? And so it turns into revenue and it turns into stock price, right? So if the capex stops because, for example, GPUs are not the right device to use for inference of neural networks, or if a new neural network is like more powerful but it takes up 1/4 of the GPUs, right? Then everything is tough to sustain. So then, yes, 2026. Even if that happens, do we care for early stage funding, right? Probably, because it always comes from, a lot of the funding comes from these players that are seeing a fantastic revenue, fantastic cash flows, the highest stock price, and so on, right? So lower stock price would bring less investment in VC from corporate, and then that would bring like just less exits. Let's follow on capital, and so that would mean like less angel capital. Is it going to happen in 2026? I don't think so, to be honest. Like there is still so much to be done, even just with the current AI models. I'm very bullish on that. There are other facts. Okay, so this is like sort of my take, right? Not in 2026, maybe later. But it's a big but there are other things that can happen, right? Other things can happen, and the politics and the meddling with the Fed. So interest rate policy, sort of reserve currency status, just like I mean, the way things are turning on a dime, they can turn on a dime in the opposite direction, right? So now there is a lot of positive partnerships with, for example, the Middle East, between like US and Middle East, but that could turn on a dime, right? So things can turn on a dime. Right. Okay. Southeast Asia, we are on the bullish side, right? Why not? It's expanding. It's still slightly behind, which gives it incredible opportunities to grow, right? And I'm not talking, well, I'm talking like about the Middle East, but also about Indonesia, Vietnam, Singapore, Taiwan, and then like of course Korea and China, which like for some respects are already even more advanced, right? So definitely up and to the right. And then we have, what am I missing here? Latin America. Yeah, I mean, I'm bullish on Latin America. I think it can rebound. There is innovation in the sense of like true entrepreneurship that can happen. It might not be venture backed, but it might be PE rather than VC. But still, lots of entrepreneurship to be done. So, and great opportunities. So, yeah, yeah, nice. Yeah, that's I think that's that. Those are the predictions. They might be a bit vague. Let me see. We didn't cover by industry. We looked a little bit at the dry powder. We looked a little bit at the mega rounds, but to be honest, it's not too important. And we see concentration as well. IPOs forecast 2026. All right, cool. Yeah, this was an interesting first stream. Lots of things learned, and I hope to see you next time.